Exploring the benefits of investing in multifamily properties. Author, Dr.Pooyan Ghamari, Swiss economist. Investing in real estate has always been a cornerstone of wealth-building strategies. Among the various types of real estate investments, multifamily properties offer a unique set of advantages that can make them particularly attractive to investors. This comprehensive exploration delves into the numerous benefits of investing in multifamily properties, highlighting why they should be a key consideration for any serious investor. Steady cash flow. One of the most significant advantages of multifamily properties is the potential for steady and reliable cash flow. Unlike single-family homes, which depend on a single tenant for rental income, multifamily properties generate revenue from multiple units. This diversification of income sources reduces the risk of complete vacancy, thereby ensuring a more consistent and predictable income stream. For instance, if one unit is vacant, the rental income from the other units can still cover the property's expenses, including mortgage payments, maintenance costs, and property management fees. This steady cash flow is crucial for maintaining financial stability and can also be reinvested to further enhance the property or expand the investment portfolio. Economies of scale. Managing a multifamily property is often more cost-effective than managing multiple single-family homes due to economies of scale. When you own multiple units within a single property, the costs of maintenance, repairs, and property management are distributed across all the units, reducing the overall expense per unit. For example, services like landscaping, pest control, and general maintenance can be performed more efficiently and at a lower cost per unit when they are consolidated into one location. Additionally, bulk purchasing of materials and services can result in significant savings. This cost efficiency not only improves profit margins but also makes it easier to maintain the property to a high standard, which can attract and retain tenants. Appreciation potential. Multifamily properties often appreciate in value over time, providing substantial returns on investment. This appreciation is driven by several factors, including increased demand for rental housing, inflation, and improvements made to the property. Urbanization and population growth, particularly in metropolitan areas, lead to higher demand for rental properties, which can drive up property values. Furthermore, investors can actively enhance the property's value through renovations, upgrades, and effective property management. These improvements can attract higher-paying tenants and increase rental income, further boosting the property's value. The appreciation potential of multifamily properties makes them a valuable long-term investment that can significantly contribute to wealth accumulation. Tax benefits. Investing in multifamily properties comes with numerous tax advantages that can enhance overall returns. Property owners can deduct a variety of expenses, including mortgage interest, property management fees, insurance premiums, and maintenance costs. Additionally, the depreciation of the property can be used to offset rental income, reducing taxable income and overall tax liability. For instance, the Internal Revenue Service, IRS, allows property owners to depreciate residential rental properties over 27.5 years, providing a substantial tax deduction each year. These tax benefits can significantly improve the net profitability of the investment, making multifamily properties an attractive option for tax-efficient wealth building. Easier financing. Financing a multifamily property can be more straightforward and advantageous than financing multiple single-family homes. Lenders often view multifamily investments as less risky due to the diversified income streams from multiple tenants. This perception of reduced risk can result in more favorable loan terms, such as lower interest rates and longer repayment periods. Additionally, the consistent cash flow from multiple units can make it easier for investors to qualify for loans and access capital for further investments. For example, lenders may offer more flexible loan-to-value, LTV, ratios and lower interest rates for multifamily properties, making it easier to secure financing and manage debt. Growing demand for rental housing. The demand for rental housing is on the rise, driven by various factors such as urbanization, changing lifestyle preferences, and economic conditions. Younger generations, such as millennials and Gen Z, often prefer renting over buying due to factors like job mobility, financial flexibility, and lifestyle choices. Additionally, economic uncertainties and the high cost of homeownership have led many people to choose renting as a more viable and attractive option. Multifamily properties are well positioned to capitalize on this growing demand, ensuring high occupancy rates and stable rental income. As cities continue to grow and evolve, the demand for well-located, high-quality rental properties is likely to increase, providing a strong market for multifamily investments. Potential for value-add opportunities. Multifamily properties offer numerous opportunities for value-add investments, allowing investors to increase property value and rental income through strategic improvements. Renovating units, enhancing common areas, and adding desirable amenities can significantly boost the property's appeal and rental rates. For example, upgrading kitchens and bathrooms, installing modern appliances, improving landscaping, and adding community amenities like a fitness center or a swimming pool can attract higher-paying tenants and reduce vacancy rates. These improvements can lead to increased rental income and higher property values, resulting in substantial returns on investment. By identifying and implementing value-add strategies, investors can maximize the profitability and growth potential of their multifamily properties. Diversification. Investing in multifamily properties provides diversification for an investment portfolio, offering a hedge against market volatility and economic downturns. Real estate investments often have a low correlation with stocks and bonds, meaning they can provide stability when traditional financial markets are unstable. This diversification can enhance overall portfolio performance and reduce risk. For instance, during periods of stock market volatility, real estate investments may continue to generate steady income and appreciate in value, providing a counterbalance to the fluctuations in other asset classes. By including multifamily properties in their investment portfolio, investors can achieve a more balanced and resilient portfolio, capable of weathering economic cycles and market fluctuations. Multifamily properties offer a multitude of benefits for investors seeking steady cash flow, appreciation potential, tax advantages, and portfolio diversification. The growing demand for rental housing, coupled with the ability to achieve economies of scale and capitalize on value-add opportunities, makes these properties an attractive and strategic investment option. By carefully selecting and managing multifamily properties, investors can build substantial wealth, achieve long-term financial security, and create a diversified and robust investment portfolio. As urbanization and demographic trends continue to drive demand for rental housing, multifamily properties are likely to remain a lucrative and resilient asset class for savvy investors.